Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is June 7, 2022, and today is Tuesday morning. So looking at the highlights of the day, the British pound and the euro tanking versus the US dollar. There's no major economic events scheduled for today, but earlier this morning, there was out of Australia a rate decision. We're going to take a look at the Aussie US dollar as well. Now looking at the Forex symbols, the major pair sells off versus the US dollar, as we mentioned. And the Turkish lira makes a new low for the year. Now looking at the indices, the Dow Jones and the NASDAQ sell off as well. Looking at commodities, gold slides while oil retraces to 118, but still strong. Looking at stocks, Amazon 20-1 stock split goes into effect and it gained yesterday. And lastly, looking at Bitcoin, sliding back to its support level of 29,000. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're looking at the Euro USD. You can see this nice sharp sell-off from 107.40-ish level down to 106.70. Not a major retracement, but a retracement nonetheless. Did have resistance there yesterday, and we did speak about this yesterday as well, as this is making a correctional move here on the downside. Now, it is at supportish level, so just take that for what it's worth at these areas. Now, jumping into the GBP USD, look at this. Wow, nosedive from 125.40 down to 124. That's 100 pips in just a day. Look at that. Okay, in a 1 hour chart, you can see that nosedive actually take into effect. Now, again, we're getting into supportish area, so I just don't want to say, oh, this is going to break this area and it's going to go further low. But this is a major area. If it does break lower than this, this is where you want to get into it, especially if it's going to make that correctional move on the downside. Now, lastly, looking at the Australian dollar, this morning, okay, you can see just this massive spike initially that we had this morning. That's the rate decision. That's what comes out. And then we had a correctional move. So if you look at a 50-minute chart this morning, you could see that just even clearer. 5-minute chart. There we go. That's even clearer. Look at that spike from 71.80-ish level, let's call it, to 72.37-ish level. Okay, it's a 50 pip spike, but nevertheless, those are the type of, if you were up at 6 o'clock in the morning, this would have been a decent play. Okay, but nevertheless, it is what it is, but it's kind of flatlining here for all intents and purposes and taking things into consideration. Now, jumping into gold retracing down to 1839. Nothing big, but a retracement nonetheless. Okay, we did hit 1873 last week after hitting a low of 1828. But we're still in the range. We're range-bound trading. As we're getting closer to the 1828 level, it might look a little bit more interesting. Looking at crude oil, trading at 119. All intents and purposes, really none changed for the week. It did retrace just a little bit from 120 down to 118. But that's, that's within reason, okay, obviously. Now, looking at the U.S. markets, the Dow Jones now trading at 32,700-ish level. Yesterday, we were at 33,000, 100-ish level. Okay, so that's a decent retracement there. Over 400 points. That's a very big move for the Dow Jones, especially for summer trading, okay? But just take it into consideration. We are summer trading. There was larger volume in that sell side. We are getting to supportish areas, so I would look for a bounce possibly here. Let's see if we do get it. You're looking at the NASDAQ also retracing and also at the bottom of its range at 12,500-ish level. Looking at the individual stocks, they wavered, okay? Apple was trading sideways, 146. Facebook 194, okay, really in a tight range. If you look at Microsoft, also just bouncing just a little bit, but really 268, and really nothing to write home about. Looking at Amazon, you'll see this, okay, which means that the stock split took into effect. We're right now trading at 124. So to give us perspective, 124 times 20 is really the price that we're trading at, which we've actually gained just a little bit yesterday, okay, in anticipation that it's going to actually appreciate with more people trying to buy into and invest in Amazon stock. Now, looking at Tesla, just trading sideways, 716. Again, no big deal there. Looking at JP Morgan, just a little retracement from 132 down to 129. But again, it's just within reason altogether. Now, lastly, okay, this is where it's very important because we're going to go over Bitcoin. Look at that, right back down to 29,000. When it's just a hit, it just gives it to you, okay? This is easy money. Just buy the spike, sell short the spike and buy the bottom of the range. That's all you got to do. I mean, it's just giving it to you, just free money here. Just every time it hits 29,000 or anything below 29,500 is a buy. Anything above 31,000 is a sell. Just very simple. And just put a very tight stop loss in any one of these type of areas. Now, lastly, looking at the Turkish lira, look at that. We're trading at 1664. Turkish lira is, all intents and purposes, is just falling out of bed. Okay, new lows for the year, and you can see that gap up. And this is not good, because the depreciation of a certain, I mean, Turkey is not the biggest economy in the world. It's not the most, effective economy in the world, but it is an economy, and that might spill over into certain countries. This is why it's a little bit disconcerting when we look at the price of the Turkish lira. Okay, so if it does break above 1670-ish level, we could see new lows for not just the year, but we could hit 18 back again. We could really be there for a long time. I mean, we were there back in December of 2021, but we corrected ourselves, okay? And that correction came in. But when you have a steady flow, when you have a chart that is just, showing yourself, it's just, inching, that means it's more permanent. So just keep that in mind. This is Fred Razak. I want to wish everybody a great trading day. Thank you.